Thank you very much.
Thanks, Gemma. Afternoon, everyone. Hope everyone's well. So this is sort of part two. Last month we looked at compensation events. So this is the sort of second part of that, in terms of once you've got a compensation event, that's all well and good, but how do you quantify it? So, you know, really important part. So what we're looking at here are what costs can be claimed, how you claim them, what's covered in the fee percentage, and also the schedule of cost components and the shorter schedule of cost components. So they're the SCC and the SSCC, both of which you will find if you've got a copy of any of the NEC forms of contract. You'll find it towards the end. In my copy, it's at pages about 60 to 65. And you know, it's worth having a look at it if you're not familiar with it. If you're not familiar with it, it's kind of about 3 pages for the schedule of cost components, 2 pages for the shorter schedule. It's a bit tortuous, to be honest, trawling through it, but hopefully what we're going to look at today, you know, will help you. So you'll get a high level overview today, which hopefully will make reading it a bit more pleasant. So first of all, we just need to think about when we use each of these. Now, I've already alluded to the fact that, you know, this is in the context of compensation events, but it's not just compensation events. It depends on the contract that we're using. So you use the schedule of cost components when you're using the contract options C, D, and E. So contract E is basically your cost reimbursable, and the schedule of cost components lists basically all the costs that you can claim under that contract. Options C and D are the pay and gain and profit sharing contracts, and how it works there is that as you go along through the project, you claim the cost of your works through the schedule of cost components. So basically, you have your timesheets and you claim for what people are doing over specific periods of time on the project. And then at the end, there's a kind of a final reckoning to decide whether the works come in under budget or over budget, and whichever one it is, there's then a sharing of the remaining money from the fixed price that will have been set in the contract, or in not such good circumstances where there's been a loss made, a sharing of that loss. So the schedule of cost components is critical here for that work as you proceed. So schedule of cost components, it's referred to in the defined cost. So what you're entitled to claim is your defined cost, and then you look to which one is relevant. So as I've said, for C, D and E contracts, it's the schedule of cost components rather than the shorter schedule. So in the schedule of cost components, we're talking about the contractor's work, subcontracted work from a contract is dealt with within the definition of defined cost. So it doesn't appear in the schedule of cost components. So if you are interested enough to read the schedule of cost components after this webinar, you know, don't panic and think, well, what happens to subcontractor costs here? Because you'll see that it's covered in defined cost. Although, spoiler alert, there's a little bit at the end where we look at NEC 4 and how that changes things. And basically, it changes that completely, so that subcontractor costs in NEC 4 are now dealt with in the schedule of cost components, which I actually think is a bit more sensible to have it all in one place in the contract. So you have your defined cost. A disallowed cost can be deducted from whatever the defined cost is. Disallowed cost is defined at 11.225 of the contract, and it pretty much makes sense when you look at it. But such costs include things like the contractor not working efficiently. So it sort of makes sense. Why should the employer pay for contractors' tardy work, slow working, etc. And the employer pays the contractor's fee and the subcontractor fee percentage in addition to the defined cost. So, the schedule of cost components looks at the base costs, and hopefully when we look at it, you'll get a clear picture of how it works. And then the fee percentage, which is basically overhead and profit. And again, we'll look at that in more detail later. But the overhead and profit is set out as a percentage in the contract data part 2, and that's added to those costs. So it's kind of quite a neat way of doing it, as opposed to, of course, with JCT, where it's either set out in the contract, but as far as variation work is concerned, for example, you end up having to claim rates based on either analogous rates within the contract or reasonable rates, and then you have to show that your overhead and profit is a reasonable sum. So, as we would expect, NEC is far more prescriptive. So the shorter schedule of cost components, when do we use this? Well, it's used for options A and B, which are the fixed price contracts. And it's because they're fixed price, obviously you're going to get paid your fixed price for doing the work. So shorter schedule of cost components is irrelevant for your fixed price work. It's really only relevant for calculating, for quantifying compensation events, so effectively changes to the work and what we would refer to as loss and expense under JCT. So that's why, if you think about it, it's logical that you would have a shorter schedule of cost components, because it's only used for compensation events. It's not as important as it is for options C, D, and E. A couple of other situations where you might use it, where you're working on options C, D, and E, and that's where PM and contractor agree to use it. Now, I must say I've never come across an instance where the parties have agreed to use it in that situation, but perhaps you guys have. Another situation where shorter schedule might be used is if the project manager assesses a compensation event in regards to any of the forms of contract. And in that case, the PM can use the shorter schedule at its discretion. So I've already mentioned, some of the information that works with the schedule of cost components, and the shorter schedule is in the contract data. So I just want to look at that very quickly, just so that you can kind of get an idea as to how it all fits in and works together. All construction contracts have what I call the kind of fill it in bit. So in JCT, we have the contract particulars. So the bits that get filled in are, what's the retention, what's the start date, what's the completion date, is there a performance bond required, is there a collateral warranty required? So all that information that's project specific. In NEC, we have the contract data. We have contract data part 1 completed by the client. So the employer, where we've got a main contract, and contract data part 2 completed by the contractor in a contract. So in the subcontract data part 2 is completed by the subcontractor, and the subcontract data part 1 is completed by the contractor. So it's the contract data part 2 that's critical here. And we have various sections towards the end of the subcontract data part 2 that need to be filled in. You can tell they need to be filled in because there's lots of dots indicating that they do. So please, contractors, subcontractors, do fill it in, do understand it and fill it in correctly. Because the difficulty is, if you don't fill it in, what the contract says, for example, is your fee percentage is the percentage in your contract data part 2. So if you turn to the contract data part 2 and there's no percentage in there, I'm not quite sure what we would do there. It sort of suggests the assumption would be that there is no percentage and therefore no overhead and profit, no entitlement to overhead and profit. And ditto, the other information that's required, if it's not filled in, then the suggestion is there's no entitlement to that money. So we have specific sections. So if you're on either an option A or a B contract, there's a section of information to be inputted for the shorter schedule of cost components. If you're on options C to E, we know that it's the schedule of cost components that applies. So again, there are sections there to be filled in. There's a section for design data, and we'll see how that relates to the schedule of cost components, but that's filled in for either, whether you're working on the schedule of cost components or the shorter schedule. And also there's a section for data for use with regard to the shorter schedule, where you're on options C, D and E, for those situations that we've already seen where the shorter schedule is used. So for example, project manager decides to use it in an assessment, or both parties agree that it's going to be used. So make sure that you complete those as relevant. So really, if you are on a schedule of cost, if you're on option C to E, you'll be completing pretty much all of the data except that is specifically related to the shorter schedule for options A and B. So, don't get muddled with that. And then, as I've said in this second bullet point, it requires the contractor or subcontractor to insert various rates or percentages, which then allow you to calculate what you're entitled to via the schedule of cost components or the shorter schedule. So that's why it's absolutely critical. If those rates and percentages aren't there, it looks like it's 0% of whatever, and we know that 0% is 0. If it's a rate, then if it's 20 hours at 0 rate, it's still 0. So that's the point at the final bullet point. So turning now to the schedule of cost components and the shorter schedule of cost components. As I said, the schedule is about 3 pages, the shorter schedule is about 2 pages. What is kind of quite nice and easy and simple with regard to both is that they both are separated into 7 fairly clear, nice, easy to understand sections. So the sections are set out there. So it's people, equipment. So it's each of those bullet points after the first one. So the first one is people, second one equipment, third plant and materials, fourth charges, fifth manufacture and fabrication. That's off-site. Next one is design, and the final one is insurance. So just a quick point regarding each. So the first one is for people. So that's that's your staff on site. When I say on site, that's a very broad description, because the specific requirement is that it's people in the working areas. So bear that in mind. We'll come back to that. The equipment, so this is your cranes, you know, and your other equipment that you need to carry out the construction work. The next item is your plant and materials, so your bricks and mortar, the materials that you need to carry out the construction. Next one, a bit of a funny one, it's charges. So that it's a sort of, it's sort of miscellaneous miscellaneous bag of things. So it's consumables, so you know, it's cost of electricity, you know, water, some, as it says there, some tools, things like computers, some, you know, the equipment that goes in your site cabins. Your site cabins are classified as equipment, but other things within the site cabins will typically be counted as charges. And then also various third-party charges for, you know, licenses, things like that, go in that category. So that's a bit of a kind of mishmash of things. The next one is the manufacture and fabrication. So this is solely for things that are manufactured off-site. I'm not going to dwell on that, because I would imagine you don't have with your work a huge amount of that. And then also design, which again covers off-site design. Both of those, the off-site works, you know, fairly similar, as it says there. There's a percentage allocation for the kind of the overheads for those items, but effectively it's done on hourly rates. And then finally, the insurance one. I mean, I think you should pretty much ignore this, because it's not to do with the cost of insurance. So it is quite misleading, which is why I said just ignore it. Your cost of your insurance is dealt with in your fee percentage, so just be careful about that. This element relates to where there is an insurance claim, and how, you know, how the money is paid in relation to, you know, monies paid on an insurance claim. So I'm not even going to cover that today. So, you know, my suggestion is that you just kind of remove that from your mind as being relevant, because, as I say, it can be misleading. And, you know, please do remember, insurance costs, the cost of your insurance policy, is very much covered in your fee percentage. So please don't get that muddled, particularly, of course, because PII is particularly pricey at the moment. So some key points to note: the fee percentage, as we've already said, this covers everything that's not included in the schedule or the shorter schedule. So just be really careful about that. So it covers overhead and profit. It also covers, as I've said, insurance. It covers recruitment costs, finance charges, parent company guarantee, all that kind of stuff. So, you know, we're going to touch on this as we go through the webinar, because I guess, you know, it is, you know, relevant to consider, you know, for both types of contracts. So when I'm talking about types of contract here, I'm talking about whether you're on A and B, so that, you know, this is really only relevant to your compensation events. But you know, it's really important if you're on options C, D, or E, and particularly E, because, you know, this is what you're going to get paid, or, you know, if it's not done properly, what you're not going to get paid. Just a reminder about compensation events. So it's any increase in prices. So it includes what we would, you know, have in JCT as a variation. It also includes your loss and expense under JCT. So just be careful about that. when we're thinking about the shorter schedule and the contract options A and B. Just also remember that it also includes your extensions of time, but we're not, the purpose today isn't to focus on that. Second bullet point is from the guidance notes. I always say this in my webinars. If you're doing work under NEC, I find the guidance notes really helpful. There are bits where it's not particularly, but there are some real gems. Now, this quote is helpful to contractors and subcontractors, because what it's saying is that the NEC or ECC, however, is designed to ensure that the contractor will be unaffected financially as a result of using the schedule of cost components or the shorter schedule of cost components. So this isn't aimed at, a situation where contractor should be, it is expected to, basically make a loss on something because, it's extra work or whatever. And, as could happen with JCT, if, for example, the rates in the contract aren't great under JCT, if those rates are analogous to variation work, then the contractor is effectively penalised because it's only entitled to claim those rates for the variation work, which could be really, really damaging if the variation was a high value, a big amount of work, because contractor could find that it's doing the work as at a loss because it's put, rates in the contract that are loss making. That's not supposed to be the case at all on NEC. So we've already looked at this. So these are the 7 different sections in the schedule of cost components and the shorter schedule. But as I've already said to you, ignore that number 7, wipe it from your minds. So just a few general points before we start to look at each one. What we're going to do is look at each of the 7 headings in detail and sort of do a comparison as to what the schedule provides, the schedule of cost components, and what the shorter schedule provides. There's some common denominators. So both of them say that that you can only claim an amount in one section. So, if, for example, there is the opportunity to claim it in 2, it's basically preventing contractors and subcontractors from any double claiming. Now, I think this is also helpful to contractors and subcontractors, because what I've found is often claims will be submitted under the schedule or the shorter schedule, and the PM will delete one because it will say, well, that's not claimable under that heading, it's claimable under another. Now, I think the pragmatic thing to do is just claim it under the other heading. But I think the other thing to point out to the PM is that, this, and it's the middle bullet point that I'm talking about, this note that you can only claim it under one does suggest that it's, that there is a bit of ambiguity and the items, are claimable under more than one category. And I think the pragmatic approach, is just to, if it is a genuine entitlement, it's under one, then it should just be paid. And I think this supports it. The other point to note is that what we're looking at is the main contract schedule of cost components and shorter schedule, but the subcontract versions are substantially the same, which is a relief because, as I say, it's not just neither are the most scintillating of reads. So let's now turn and look at each of those. Well, we've got 7 components, but we're not particularly going to look at insurance, so we're going to look at the 6. So first of all is the people. So, you know, this is looking at situation where for contracts A and B, you've got a compensation event, you need to quantify it. What's the people cost? What's the cost for the people working on that compensation event? In contrast, for options C, D, and E, you're looking at the people cost for the work carried out over a certain period. Typically, it would be over a month. If you're on options A and B, you're looking at the shorter schedule, remember, and if you're on options C, D, and E, you're looking at the schedule. So the shorter schedule says that you're claiming for the cost of people as opposed to employees, which is referred to in the schedule of cost components. So for compensation events, you're looking at the cost of people paid by the contractor, so it includes subbies in working areas, including payments made under the law and pension payments. So I think rather than getting into the detail too quickly, the easiest thing to look at here is that we're pretty much looking at the actual cost of each employee. So if you think about your cost to your business, you'll get your pay slip every month, hopefully, and it'll be your net pay, but there's also the tax paid, so it's your gross pay basically. There's also employer's national insurance that is paid by the employer for you, which is over and above your salary. So that's an extra. There might be a pension contribution. If you move away from your pay slip, there might be a company car, which is obviously a substantial cost to the business. There may be other costs, or health insurance. So, there's all sorts of costs. So it's not just a person's gross salary. It's all sorts of other things that need to be taken into account. So that's why it says payments made under the law and pension payments. The schedule of cost components, because we know it's going to be slightly more detail. First of all, it relates only to the cost of employees in that working area. So subcontractors are dealt with, as we saw earlier, under the defined cost. Again, it's just in the working areas. Take note of that because we'll come to an issue on that later. And what it has here is quite a long list of the detail as to what's included. So just to give you an idea, we've covered some of them. It also covers your overtime, fairly obvious, I think, and bonuses and incentives, again, fairly obvious. One of them is working in special circumstances. It covers absence due to sickness and holidays. It also includes payments made in relation to people for things like travel, kind of board and lodge if you're having to work away, medicals, your death in service benefits. So there's all sorts of things. So, this is all to make sure that nothing's missed off, which is really important because, clearly if something's missed off, you can't recover it. And, we've already seen that the contract specifically says if it's not in that list, you can't recover it because it's deemed included in your fee percentage. So, you're immediately then eating into your fee percentage, which is then going to reduce your OHP figure. So, it's really important that you look at these and remember to claim all these costs that, I think probably to a lot of us, probably not to, I don't know, the HR or whoever deals with the cost of employees, or your finance director, but, to a lot of us are all sort of hidden costs of employing people. Yeah, so both of these include costs for employees whose normal place of work is within the working area. And this is all very specific. So if you're familiar with NEC, you'll know that this is going somewhere. And it also includes employees who are working within the working area, doing particular work, even if that's not their normal place of work. So just bear those two in mind. So it includes an individual who might be working as a people cost. So they might be working, back in your head office, but for this project, their normal place of work must be within the working area. It also includes someone who is specifically not engaged usually within the working area, but for a particular piece of work which is being charged, they are working within that. So, this could cause problems working from home. If you have normally been working on a project, but you're working from home because of COVID, then, you could probably be charged. If you're not normally working within the working area, but you're doing work on the project, then there is an argument that if you're working from home, you're covered within the OHP, so the fee percentage for this work rather than this people cost. So so I've put a note here. Remember to consider what the working area is. So typically it would definitely be the site. You've got really, really big problems if it's not the site, because that's going to severely limit what you can claim. But also think about anything else. So, if the site, if you're being given another area which isn't part of the site, but that you're going to be working on, make sure that that's covered. So, if you are, working on an area, for example, that's off-site, so I don't know, doing some road work, changes to a road to, facilitate access to, the main, where whatever is being constructed, make sure that that's covered. Some people like to put their head office or their office in as a working area, so that basically anybody who's working in the head office on the project can claim their costs as people. Otherwise, as it says, it's deemed to have been included in the fee percentage. Now, what I think would need to happen if your office is covered as the working area, I suspect your fee percentage would need to be substantially less than it would normally be. Otherwise, you're going to make yourself, if it's a tendered situation, you're not going to be particularly competitive. I've already noted the next bullet point. The schedule of cost components refers to 12C. Now, just a note about this numbering. So we've seen this people is the first item. So it's number 1 in the schedule of cost components. And then we always have this slightly odd numbering in NEC. So rather than it going, 1 is the people, so we have 1.1, 1.2, 1.3, it immediately goes to 11, then 12. So this is the second element of the people. It's pretty obvious if you look at it. It just looks a bit confusing, from these slides. So 12C, we've already looked at this, working in special circumstances. So that includes working at height, shift allowances, food allowances. These are all listed in the schedule of cost components as a cost of for an individual person. For both of them, overtime cost is payable, as you'd expect, but, and this is the kind of caveat you expect with NEC because it's very prescriptive, it's only payable if that overtime work couldn't have been completed by other employees on ordinary, so non-overtime rates. So that's really to prevent a sort of double claim where, you know, you've got, you know, normal site working 8 till 4, and you've got people hanging around doing nothing because there's nothing to do, and then, you know, you're claiming overtime between 4 and 10 for work that could have been carried out, you know, by the people who, you know, had nothing to do. So it's a fairly sensible one, and probably under JCT, if somebody, you know, if the employer came up with evidence that that's what a contractor was doing, that overtime claim would probably be discounted as failure to mitigate. But the fact that it's in, you know, expressly in this contract, you know, means that, you know, if you have a dispute, you're at adjudication, you know, the client or the contractor in a subcontractor you know, might kind of look at this and, you know, try and see if they can look for areas where economies could have been achieved by the contractor or subcontractor on this. For both of them, again, third-party labour costs are at open market or competitively tendered rates. And again, that's sort of to avoid a situation where, for whatever reason, inflated rates are paid, which would be unfair to require the client to pay. So that's the first item. So that's your people cost. So the second item in the schedules is the equipment. So we're seeing this is, for example, your plant, your machinery, your cranes, your diggers, etc., etc. It doesn't include some of your, you know, small tools, etc., because as we've already seen, some of that is included in that funny heading for charges. So just bear that in mind. Please note that equipment, it's defined in NEC, so it's defined as basically anything that's used to provide the works, as distinguishable from something that's part, you know, it's going to be part of the works. As we've already said, it includes the cost of accommodation, seaside cabins, but lots of other things, particularly the things within the site cabins, but also small tools, etc., covered under charges, where we have a percentage for what's called the working areas or the people overheads. So a little bit confusing, but, you know, if you see that percentage, that's what it's about. So equipment for the shorter schedule of cost components. Now, because of course this is the shorter schedule, it's just for options A and B typically, and it's just for compensation events, so changes within that contract. It's a bit more rough and ready than the schedule of cost components. So what we have here is a reference to the CD, so that's my shorthand for contract data. So we saw before when we were dealing with people that we had, that was number 1. So we had, it started with the section 11, 12, 13. We're on to equipment now, which is number 2. So the first item is 21. So basically, what you get paid for equipment, for your cranes, etc., is based on any rates listed in the contract data part 2 or any published lists that are referred to. So typically what you'll see there is in the contract data part 2 reference to the SECA list of rates, which I understand you know, are fairly sensible rates for contractors and subcontractors. So that's how you your equipment is going to be priced, and then other equipment is priced at competitively tendered or open market rates. So of course, all of this is just about recovering the cost of the equipment, in the same way it's just recovering the cost of the people for the people section, because once you've calculated that, you would then apply the fee percentage, which then deals with your overhead profit and those other miscellaneous items. So next, the schedule of cost components for equipment. So here we're looking at where you're using options C, D and E contract. So this is for your works. So, you know, really, really important. This, it needs to be right. And it certainly doesn't need to be at rates that are disadvantageous to the contractor or subcontractor, or you're soon going to get into financial difficulty. So, as you'd expect, it's a little bit more detailed than the shorter schedule. So, when you've got the hire or rent of equipment, that's what you get paid, whatever you've paid for the hire or the rent. Providing it's not owned by you as contractor or subcontractor or a parent or related company. If it is, then you would get a market rate to avoid the situation where you as you know, a company approach a parent company, sister company to hire it. You say, well, I'm on option E, so they then increase the rates because both parties know that they're going to recover it. So it's basically to stop, you know, any advantage being taken of the client. If the equipment's owned by the contractor or on hire purchase or whatever, then open market rates are paid. And then we've got a couple of others, which I think are probably fairly unusual. So the first one is payments for equipment purchased specifically for the work which is the subject of the contract. I mean, I've never come across this before. I'm sure it does happen occasionally, but basically there's a way of calculating what is effectively the depreciation over the period of which it's the period of time that it's used. So I think the theory is that, for example, contractor buys the piece of equipment for X pounds. I'm not going to give a specific example because I have no idea how much you'd pay for a crane, for example. So you buy a specific piece of equipment for £1,000, you use it for the duration of the project, and you sell it afterwards for 500. And effectively, how this should work is that the contractor is paid 500 because that's what it has lost in value. And obviously, you know, it's up to the contractor whether it does sell it or not, because it might want to keep the equipment. But you know, equally, the employer hasn't overpaid for it. And then also there's a section for special equipment listed in the contract data, which is payable at the rate stated in the contract data. So again, be really careful here to make sure that if you are going to use some special equipment where you're using options C, D and E, that you include it in the contract data and the rate for it. Just a few miscellaneous points for both the shorter schedule and the schedule. So they both mirror each other here. So they both allow for a claim for the cost of equipment consumed. So, for example, petrol that's consumed. They both provide for the cost of transporting the equipment to the working areas, also for erecting it and dismantling it. But, and again, this is to balance so that you can't double claim. If you know that cost is included in the hire or the rental rate, then obviously you can't claim it. So, you know, there's a huge element of transparency here. It also includes the cost of operatives, so the crane operator, providing, and again, this is one of the checks and balances, providing the cost of that crane operator hasn't been included in the people cost. And again, that's just to avoid that double claiming. So item 3 on the schedule of cost components and the shorter schedule, plant and materials. Again, it's a defined term in the contract, so it's basically materials that are included in the works. So distinguished from the equipment, which is to provide the work. So this is clearly the bricks and mortar, anything that's going to form part of the works. Schedule of cost components and the shorter schedule are identical in this section, so that's good. What you should note, particularly for big projects, is that it doesn't cover the cost of procurement. So relevant to contractors and subcontractors. If there is going to be a substantial procurement exercise, you might want to include that as an extra cost by amending the contract, or alternatively, I suppose, factor it into your fee percentage. I'm not sure how realistic that is on a practical level, just because you're working on a percentage, and you might have absolutely no idea how much the procurement's going to cost, but just bear that in mind. So as far as the plant and materials is concerned, so remember, this all applies to both schedules, the shorter and the ordinary schedule. So it includes specifically, as did the equipment, the costs of delivery to and removal from those working areas. It also includes the provision and removing of packaging. So you can see how detailed this is. Very, very different from JCT, and it also includes payment for samples and testing that's required under the contract. Next bullet point, again, as part of these checks and balances to prevent duplication, the contractor is required to provide a credit for any payments received for disposal of plant and materials, providing that cost hasn't been disallowed. Otherwise, that's a double counting. And the aim of this, part of the checks and balances, it's to prevent or deter, as it says there, the contract over ordering, but to hopefully mean that the contract does not squeeze so much that it's forced into under ordering, which is why we have the final bullet point that allows the contractor to be paid for removing plant and materials from a site which haven't been used. So next on to this miscellaneous section, which is called charges. So this is section 4, which is why you'll see we've got references to 41, 42, 43. If you think of them as 4.1, 4.2, 4.3, I think it's a little bit clearer. Now, charges, helpfully, is not defined under NEC, although it's sort of the least clear of all of these categories. But how I think of it is it's the consumables that the contractor uses in the working area. So it covers water, gas if it's used, electricity. Now, both of these are calculated. Sorry, for the shorter schedule of cost components, all of these are calculated as a percentage. So it's a percentage of the people cost. So we saw number one is the people cost. So if you think about it, this is what you're using for options A and B, your fixed price contracts. So you're only using this for your compensation events. So if you have any extra water, gas, electricity for your compensation events, it's a percentage of your people cost for that compensation event. So hopefully your people cost will sort of represent, will be fairly representative, and the percentage you should hopefully have included in your contract data part 2, that we looked at the start. So you just need to, think about that when you are preparing your contract data part 2. What would be an appropriate percentage, for that extra consumption? And, I guess, if it's a really small compensation event, small value, it's probably minimal cost anyway, so it's probably insignificant. The difficulty comes when, you have loads and loads of small value compensation events, which then start to dwarf your fixed price. And I have seen this. I've seen contracts where the compensation events end up being an extra 50% and more of the actual contract price. So, if you get this percentage wrong, I guess, again, it can eat into your profit quite substantially. And the same point applies to, a high value, really large compensation event. If you get this percentage wrong, it can then start to eat into your profitability. So it's easy for me to sit here and say, be really careful. Hopefully you all, have ways in which you do calculate these percentages. Third bullet point, it also includes any payment to public authorities. So these are these kind of third-party charges, I suppose, third-party costs that are payable. It also includes the cancellation of a compensation event and things like inspection certificates, charges for others to visit working areas. So kind of we've just stepped back again here. We know that for these charges, we've seen that for the shorter schedule, that's just for options A and B. So we're just looking at compensation events. So, it would just be inspection certificates, local authority charges in relation to that compensation event. It wouldn't include, those charges in relation to your works, because your fixed price should cover that. With regard to options C, D, and E, it's basically any inspection certificate, because it's covering all of your work. So any payment to local authority, any type of charge. So just bear that in mind. It's a much wider scope for options C, D, and E. It also includes consumables and equipment provided by the contractor for the project manager and supervisor's offices. And it also includes specialist services. So this is where the percentages comes in that we've sort of already seen. The percentage doesn't apply to all of the charges, just to some, and it applies to different charges depending on whether you're on the schedule of cost components or the shorter schedule. So, if we wanted it more complicated, we couldn't possibly make it more complicated, basically. Before we go on to that, the first bullet point covers the point that I've already referred to, that it covers the cost of equipment, supplies and services. So, your catering, security, copying, phones, computers, hand tools. So it includes that kind of cost, but it excludes accommodation. So, looking now at this percentage that we've already seen, that for the shorter schedule, so where it's just on options A and B for your compensation events. It includes water, gas and electricity. For the schedule of cost components, that is just done at actual cost, probably for obvious reasons, because that is just your basic cost of water, gas, electricity, because it's for the whole of your work. So there's no need to segregate off compensation events from your main works. So in both cases, you will have a percentage, or hopefully you will have a percentage in your contract data, whether you're on the schedule of cost components or the shorter schedule. And in both situations, the percentage is applied to the people cost for that item. So I guess if you're looking at what your percentage would be, typically, I don't know, I would expect the percentage to be higher for the shorter schedule. So if you're on an option A or B contract, than it would be for the schedule, because you've got extra items included. Oh, I didn't do that. I don't know. I think I didn't. Somebody moving my slides. So right, so that's right. Where are we? Yeah, so that's right. So manufacture and fabrication. I don't know whether that's someone just telling me to get a move on. Manufacturing and fabrication, just going to touch on really quickly. It's basically it's for outside of the working areas. So I suspect it's probably quite rare for your work. You recover the hourly rates. They're going to be in the contract data, so please remember to put them in if you've got this scenario. And then overheads are calculated by reference to a percentage. Where's the percentage? It's in your contract data, so remember to include that. Design, exactly the same, except in addition, that final bullet point, the cost of travel is included in addition. Insurance, already dealt with that, and hopefully you've sort of blanked it from your mind. Right, just a few problems, or as one of my clients used to say, challenges. With the way in which NEC deals with this, as opposed to JCT. So, the people issue, you will have seen it's really prescriptive. And what we often see is project manager wanting to see, how you've calculated the cost of people. And it's not just, oh, well, we pay our labourers X pounds per hour, and then, you add on all the extras. So it's, X plus Y equals Z pounds per hour. It's for individuals, remember. So requirement for pay slips, not particularly attractive for data protection issues. It's still compliant because you have a reason for disclosing pay slips, but people are fairly sensitive about that. So, I mean, what I would say is, if you have the chance, put rates in, but just be really careful about putting rates in. But it avoids this sort of requirement to provide all this information. Self-employed people, do they come in within the people category or the subcontractor category? Because of course we know that typically under the schedule of cost components, subcontractors aren't included. Something that's always going to be a problem, and it's difficult to see how we can avoid this, is records of who was working on a particular area and for how many hours when we're talking about compensation event work. I know it's really tedious, but you really, really need this information. You're going to be severely hampered, if you haven't got it. Average rates aren't allowed. This point about who's included in the people and who in the fee, we've touched upon this in the context of, including your working area as your own offices. As far as the equipment's concerned, sometimes clients don't like the seeker rates being used because they say they're higher than they would like. And again, similar costs to the people, probably less sensitivity, but the requirement to show, right, we had this particular crane and this is the particular cost of that crane, and this was how long it spent engaged on that particular compensation event, and providing all that paperwork, and also the last bullet, which again we're probably never going to get away from because it's always going to be an issue, the productivity. Was it needed? Was it engaged at all times? Could it have been used elsewhere? All those kinds of questions. Plant and materials, again, invoices shouldn't be so difficult, but again, showing that it's directly related to the works, or for the shorter schedule, was it related specifically to compensation event work? Sometimes it's a bit difficult to tell. You use, I don't know, a certain amount of concrete in a compensation event. You're not going to specifically order that. Typically, it would come as part of an order that also covers the main work, so it's separating it out. So very, very quickly, just some changes that we have in NEC4, some good, some bad. First one, and this relates to a question asked in the last seminar, it is now a new compensation event, so 60.120, so that the contractor gets paid its cost for preparing a quote for a proposed instruction where the project manager doesn't accept it. So if the project manager does accept it, then it's as per the usual. So for A and B, the cost of preparing the quote is deemed to be included in your fee percentage. But for options C, D, and E, you are allowed to claim that cost of preparation within your costings. So this new compensation event, I always get this muddled up. It only applies where it's a proposed instruction from the PM and the PM doesn't accept it, doesn't go ahead with it. There's also a new 121, and this is additional CEs in the contract data part 1. So please, watch out for those. I think it's unlikely that there would be any, unless it's actually limiting the existing CEs. So do be careful with that. So we've now got CEs in section clause 60, also in the contract data part 1, also potentially in the Z clauses, so the amendments to NEC, and finally, there are some compensation events in the optional X clauses as well. Right, so the changes, right, so lots of these really simplify the situation. So we've already seen, so what we've learned today is that for options C, D, and E of the contract, you can use, in certain circumstances, both schedules. Well, NEC4 changes that, and there's only one schedule allowed to be used, and that is the ordinary schedule. The shorter schedule is just not applicable, which I think simplifies things, but whether it's going to have any practical impact on your lives, I think is doubtful, because I suspect it's probably not used very often as it is. So yes, what has been removed? The shorter schedule of cost components for options C, D, and E, that's out. So also, not a good change in my view, these working areas overheads and people overheads in both schedules have been removed. So if you remember when we got to the charges section, I was talking about percentages. So that's for certain items in those charges, you could just percentage it against the people cost. That's now been removed, and you've got to look at actual cost. I think that's a retrograde step, because I think anything here where you can simplify it and use percentages instead of actual cost, particularly where it's likely to be a relatively small cost. So if you remember, we were talking about things like the cost of water, electricity, things like that, any, where we can percentage those instead of actual cost and have to prove it is good, but it's been removed. So I'm sad about that. And the final one is the subcontractor fee has been deleted, which, I think helps, because it avoids a lot of confusion that we've had about that subcontractor fee. What has been added to the schedule of cost components for both of them is a subcontractor section. So having gone on about 7 sections, there are now 8 sections for NEC4. It's pretty self-explanatory. And I think it's just really helpful. It means we've got a one-stop shop instead of going between the schedule of cost components and defined cost. And what it means is that the defined cost now doesn't refer to anything about subcontractors. It just refers you directly to the schedule of cost components. One really good change, I think, in the shorter schedule only is that there's a section for people rates. So this is what I was talking about earlier, rather than having to prove the actual cost for people with pay slips and, here's their overtime and here's their, health insurance, blah, blah, blah. You just agree people rates for, a labourer is a certain rate, another category of a worker is another rate. That goes in to the contract data part 2. Please don't forget to put it in. And you just have that rate. I think that's a good step forward. I would like to see it in the schedule of cost components. Also, there's nothing to stop you putting it in as an amendment, but be super careful when you're amending it that you don't cause yourself more problems by not doing it properly. And if you're doing it for the shorter schedule, as I said there, beware of missing a category, because I think then that gives the project manager discretion just not to pay anything for that category of person. So that replaces a cost-based calculation with a pre-priced list, which is always helpful. So any questions? Now, I know Gemma said my slides are available. My mobile number's on there as well as my email. So if you think of anything later, do give me a call or feel free to email me. Question. So can items that are deemed included in the P be included in the if they are subcontracted? Yeah, I think if the item is part of a subcontracted item, then that all goes under your subcontract costs. So you charge, deemed included in the people over, so we're talking about the charges elements. Yes, they can, but if you're the contractor and it's your overheads, then you need to use that percentage. Yeah, the COVID claims are coming through. What happened was, obviously, COVID kind of impacted on us in March. So kind of March, April last year, I spent quite a lot of time speaking to people on the phone, telling them what notices they had to submit to protect their position, what evidence to have, so that if it became problematic, they had everything ready. Two, have some, decent negotiations, but, if all else failed, to adjudicate if necessary. So, of course, projects that were ongoing in March, we're now seeing them come to an end. A bit of negotiations being unsuccessful. So, yes, we're now coming up with COVID claims. The first ones that I saw were typically towards the end of projects. So, if they were in delay, typically, COVID didn't really impact on them. We're now seeing them coming up. I think a few things on valuation for NEC. Obviously, hopefully, you've notified COVID as a CE, already. But unlike JCT, typically under NEC, you won't just get an extension of time, you'll get time and money under NEC. But for JCT, depending on the circumstances, you might be limited to just getting an extension of time. But what we are looking at there is situations where employers give an extension of time and say, oh, this is a COVID delay. And you think, oh, that's very generous. They were very quick to hold their hands up there and, award it. But when you look into it, actually, the real cause of the delay is something else, which, typically is an employer delay, which, would entitle contractor not only to an extension of time, but to loss and expense as well. So, just beware of that, be a little bit skeptical if you're on a JCT and you're awarded an extension of time for COVID, just make sure that it is genuinely COVID and it's not that you're entitled to your costs as well. But yes, COVID related costs would be calculated on the basis of whichever, a shorter schedule if you're on options